Hey there, everyone. I am Kim Snyder, and in this edition of Sane Crypto, we are going to get right down to the basics. Today is a beginner's guide to Bitcoin and cryptocurrency, because when I mention the word cryptocurrency or even Bitcoin, as much as it's been in the news lately, at a party or to a friend, the response that I get, well, often they don't have a clue what I'm talking about, but probably the response that I get most often is, you know what, I've heard of it, but I am really not sure what it is. So before we dive in, just quick question of the day, which is, how much do you know about cryptocurrency and crypto investing? Go ahead and add that in the comments below. Are you crypto clueless? A crypto fanatic, somewhere in between, heavily invested, just interested, whatever. Just let me know what that is. And go ahead and type that in right now. Okay. And while you're doing that, let me just quickly introduce myself. Again, my name is Kim Snyder. I am a 20 plus year investment industry veteran, innovator, and educator. And while there is no doubt that there is some huge opportunity in investing in cryptocurrencies right now, there is also no such thing as magic internet money, as many crypto kiddies would have you believe there is. There is a lot of Kool Aid drinking going on right now. So this is my attempt to find a happy medium and bring some sanity to an otherwise pretty insane space. Okay, so let's dig in. One, I'm going to explain what Bitcoin / cryptocurrency is. Two, tell you what you need to know about Bitcoin and crypto to invest in it, which frankly may surprise you, what I'm going to say here. And for purposes of this primer, I am just going to talk about Bitcoin mainly because it's the largest of the cryptocurrencies. And if you understand that one, then you've got the basic idea. Okay, so let's start with, what is it? So basically, Bitcoin is software that forms a decentralized peer-to-peer payment system, which means that there is no central authority like the US Treasury or Federal Reserve, okay? It is fair to call it a digital currency or a cryptocurrency, but it's a little bit of a misnomer because at the moment, very few people are using it as a currency to pay for things. Instead, they are using it either as an investment vehicle or as a store of value. All right. Now, let's define another term, blockchain. The one thing that all cryptocurrencies have in common is that they run on something called the blockchain, which is a software system which is often described as an immutable digital ledger or record book. And this record book is shared by hundreds of thousands of computers all across the internet, who each keep a copy of the entire thing, if you can imagine that, hence the term decentralized. Now, this record book, it can be used to record all kinds of things, including the transfer of money. And since I think that is probably the most familiar, let's use that in a simple example so that we can understand how this works. So when John wants to send money to Sue, a new line is created in the blockchain ledger detailing that transaction. And this line item then gets sent off to the hundreds of thousands of other computers who have a copy of the record. And those computers confirm that the transaction is authorized. And then ultimately they agree or disagree that everything about the transaction is legitimate. And once they do confirm, a little, it's called a confirmation, little, tick mark of approval, right? And what it has to match up perfectly on every single copy of the record. So you can think of it like this. It's as if John and Sue had a few 100,000 of their closest friends stand around them, watching John hand Sue the money in question, right? And then they all put their heads together and agreed that, yes, he really did hand her the money, as well as whatever other aspects of the transaction they had agreed on, like, it was US currency and it was in the right amount, and et cetera, et cetera, et cetera. Okay. So the genius of this shared record book, and what is so disruptive about it potentially, is that it requires no bank, no centrally owned company. You don't have to place your trust in any financial institution. There's no need for a middleman of any shape, form, or fashion. Okay, that hence the word peer-to-peer. Now, just to elaborate a little bit further, this shared record book, it's not owned by any one individual or organization. It's owned by everyone who has a copy. But that doesn't mean that any one person who has a copy has any sort of control, because again, there are hundreds of thousands of individual copies spread across the internet. And another thing that's important is that this record book is what we call immutable, which in the simplest terms means it's irreversible. Every line entry made in the record book, or the ledger, or the blockchain, whatever we're calling it, will exist into perpetuity, or at least as long as the internet exists, right? So just as an example, again, going back to our example, if Sue wanted to refund John, then this would be a new line item, sending the money back, not the crossing out of the original transaction. Okay, that's what we mean by immutable. Now, because of these technology design decisions, fudging line items on this shared record book is impossible, really. I mean, if someone who has one or more copies of the record book on their computers was to try to dishonestly change it, then those changes would all be rejected by the hundreds of thousands of other computers used in that verification process, because things wouldn't match up. Okay, so that is really about all that you need to know about the underlying technology in order to invest in it. Actually, one other thing. Here's one other example that might help. I don't know if you remember, like, the standardized tests that you took when you were in school. Remember those questions that were like A is to B as X is to Y or whatever? Okay, I hated those questions, but here's an example that might help. So in this case, internet is to blockchain as Bitcoin is to, sorry, other way around, as Amazon is to Bitcoin. Okay, so there we go. So back in the mid-90s, no one knew what the internet was either. In a conversation, my father once famously asked me, Kim, like, do you really think this internet thing is going to change anything? Yeah. But so back then, internet was the underlying technology. And now blockchain is the underlying, potentially massively disruptive technology today. The companies back then that were being built on this newfangled internet thingy, right? They ranged from pets.com, which was, the famous sock puppet company, which failed along with thousands of others, to Amazon, which survived, rose from the ashes, to be what it is today. And then, tons of new companies that came after the initial internet bubble burst, right? So does that make sense? Okay. then let's define a few more terms and concepts then. All right, so the next question is Bitcoin a real thing? Like, can I carry it around like real money? And, you know, crypto advocates would probably take umbrage at that real money part. For one, in the crypto world, what I just referred to as, quote, real money is called fiat currency to distinguish it from digital or cryptocurrency. And oops, given that it is fiat, at least in the case of the US dollar and most other major currencies in the world, meaning that it is a currency that a government has declared to be legal tender, but it's not backed by any sort of a physical commodity like gold, like we used to be on the gold reserve, right? Some would argue over which of these is real, but you know, that is not the point of this discussion. This is about, we're not in for a philosophical debate here, right? This is about understanding enough so that we can either invest in it or not. So is it a real thing? Well, yes and no. It is definitely a real thing, and you can kind of carry it around with you, but it isn't like a physical coin like what you often see depicted either in the articles about it or you know, even in the little icon here on my slide. Okay, so let me explain. So remember that I said that the blockchain is just really, it's just software like the internet. So can you carry the internet around with you? No, but you can carry around access to it, right? Well, cryptocurrency is the same way. Your quote currency, it really what it is it is an entry in the blockchain ledger. That's it, right? John gave Sue some money, Sue some money. There was an entry in the blockchain ledger. She didn't take physical possession of the money, but the fact that all the computers confirm that transaction means that money is out of John's ledger and into Sue's. Okay, so it's just like the money in your regular bank account, right? It's really just an entry in the bank's ledger, all right? But in this case, that entry is stored on the distributed ledger with copies on hundreds of thousands of computers, right? Okay, with me so far? Okay, so the way that you access your cryptocurrency is with a software key, which you can kind of think of like a password on steroids. Whoever has that key has access to your crypto, just like whoever has key to your house has access to your house, right? And each entry or transaction has its own key. So can you carry around crypto? No, but you can carry around access to it. For example, you could be carrying around the keys, which is totally not advisable because like cash, you lose that key, your crypto is lost forever. There's no recourse, no forgot my password link. Doesn't work like that, right? It's just gone into the ether forever, okay? But you can also carry around, obviously, different apps, which are called digital wallets that allow you to send and receive and store your digital currency, or at least those keys, by passing keys. Anyway, sort of like we do today, okay? But there's nothing physical. Got it? So like, just imagine if we had invented money, like imagine if we first invented it now. Like why would we have created paper money and coins, okay? Right, so that's what crypto is, okay? All right, next question is, okay, so someone asked me this the other day, you know, especially given all the ups and downs and you know, how do I determine what's fair value of Bitcoin or of a cryptocurrency? And I thought to myself, that is so quaint because you never do. Look, so first of all, in case you don't know, cryptocurrencies are definitely a bubble right now. If they weren't, then you'd probably have no interest in this video, right? Okay, So the price of Bitcoin and all cryptocurrencies, it fluctuates up and down all day, every day, based on buying and selling, just like a stock, and just like the internet stocks did during the internet bubble. Okay. Now, just to be clear, this is where I differ from the conventional wisdom. I do not believe that, and have never, ever done in 20 plus years as a professional money manager and professional options trader before that, one iota of research on the companies that I hold or that my clients or students hold, none ever. Nor do I read the news or keep up with the stock market. Okay, because what I learned almost immediately as a wet behind the ears young options trader, and have had confirmed over and over again, both by the academic research and personal experience, is that there is absolutely no relationship between the price of something and any underlying fundamental data. Okay. Now, in theory, sure. In theory, the price of a stock is supposed to be the future value of expected earnings. Okay, but that's a complete joke, right? In theory, the price of cryptocurrency is supposed to reflect, or should reflect, investors' faith in Bitcoin and blockchain, rather, as a technology. Okay, but in truth, prices are random, driven by a million different factors and a million different actors, and therefore have no relationship in the short run to fundamentals whatsoever. So any effort to learn anything from reading prospectuses or white papers is an utter waste of time, at least from an investment perspective. Okay, which I understand to some people is disconcerting. However, I don't think it should be disconcerting at all. I think it should be totally liberating. It means that knowledge doesn't win, because if it did, little guys like you and I would never have a chance. Like, we wouldn't even be able to play in this market, any market. Okay. The good news is that systems win. Good systems followed religiously win out every time. Okay. Which leads me to my next point, which is, how do I buy and sell cryptocurrency? Well, as it turns out, it is pretty similar to buying and selling stocks, if you've ever done that. There are a number of getting easier to use exchanges now where you can buy Bitcoin and other cryptocurrencies. Quite honestly, the buying and the selling is not the hard part. The setup is just kind of a nightmare. But once you get past that, the buying and the selling part is actually pretty straightforward. It will feel a lot like buying and selling a stock. The most popular mainstream exchange right now is called Coinbase, which is supposedly adding like 159,000 new customers per day. Some people are claiming that might account for some of the recent rise in cryptocurrencies, whatever. But that's definitely not my choice, however, because their fees are just pretty outrageous. The exchange I use is called Gemini, and I use them because they are US based, and their fee structure makes it fees much lower based on the way that I manage my crypto portfolio. So that's who I use. And there are others, lots of others. Okay. You may be wondering if you can buy or sell cryptocurrency in like a regular old brokerage account, or hold it in your IRA. So my regular brokerage account, like, I'm talking like Schwab or, Merrill Lynch or Fidelity or whoever, E-Trade, TD Ameritrade, all of those. That's what I mean, right? And the answer is no and yes, but don't. So let me explain. You cannot, for the moment, buy and sell crypto through your regular brokerage account. You have to use a specialized crypto broker like Gemini or Coinbase or whomever. Okay. And while it is not illegal to hold crypto in a self-directed IRA, there is currently only one custodian who is doing it. And I took a look at them, And because most of our assets are in IRAs, and the fees, I mean, it's just criminal what they are doing. Criminal. So do not do that. Stay away from that until later, when we have some more options, which eventually there will be, just like stock options, the progression that it took, very similar, right? Now they're commonplace in IRAs, and every brokerage firm allows them. But, back when I first started, they didn't. There was one. So do not do that for now. Let's see. Oh, the other question though was, well, what if you don't have any money outside of your IRAs to invest? Then are you just SOL? You can't participate? No. There are things known as investment trusts, which you can buy it through traditional brokerage accounts, and including in your IRA. The investment trust holds the whatever Bitcoin, Ethereum, whatever cryptocurrency it is, and then you buy the investment trust. It is not ideal, and the reason it is not ideal is a couple things, but the main one is that you are most times paying a massive premium over the price of the underlying cryptocurrency, and that premium fluctuates up and down a lot. And the fact that it's so big adds just an extra layer of risk, and you could call it cost. I mean, it's massive. So it's an option, but it's not the ideal option. All right. So now that we know some basics about crypto and blockchain, we know how to buy and sell. The next question is, should we? Okay. I'm going to leave that question for my next video, other than to say this, which is never, ever, ever, ever invest money in crypto that is not risk capital. I don't have my cursor set up so that you can see this, but why won't it show you? Well, over on the left-hand side of this slide, right? What we're just looking right now for, by the way, this whole thing is available on my website, sanecrypto.com/roadmap. The sun is like shining over my computer into my eyes. Anyway, but for the moment, what the phase that we are in is this bottom phase. Okay, we are in a bubble, and as you can see in the next one up, okay, on the left-hand side, it will turn to ashes eventually. But this time period is characterized by irrational exuberance, which is people with no experience piling in, thinking that they are geniuses, and with clouded judgment. Okay, over on the far right-hand side, the keys to success is to not do that, and instead be disciplined and protect your profits with a rigid trading plan, right? But moving to the left, look, let's face it, this thing could go to ashes, tomorrow, which is why I'm saying you only put risk capital in right now. Only risk capital, meaning if you lost it tomorrow, it would have absolutely no effect on your standard of living or your future standard of living. Okay, you do not take out mortgages to do this. You do not borrow on your credit cards. You do not borrow. I mean, look, so here's the good news about crypto is that unlike stocks, you actually couldn't buy $10 worth of crypto. I think the lowest, you can even buy $1. Actually. So, if you've got $10 of risk capital and you want to put that in, just, great, go for it. Who knows? It might someday be $1,000, but if it also could be zero. And that's why it's risk capital only for now. We are gambling, right? We are gambling that because I'm getting way off track. A bubble is neither inherently good or bad. It is in fact an opportunity to make a lot of money if you know what you're doing and you're very, very disciplined. And quite frankly, because markets are zero-sum game, we'll be taking that money from people with no experience piling in, thinking they are geniuses. Okay. So that's the game that we are playing. And the reason that we are playing it, where in the ashes phase, I say we're just not even in, is because these outsized potential for returns are so huge that it is worth the risk if you have risk capital. Okay, does that make sense? So that is so important. Okay, risk capital only. All right. And again, you can look at this if you like and go over the rest of it. It's at sanecrypto.com/roadmap. Okay. So let's get to your your crypto questions. I'm gonna let's see. Just real quick before I take your questions, you can if you are watching the replay, you can post them in the comments below and I will circle back and answer them. Also, Facebook Messenger, which is down in the bottom left-hand corner, m.me/sanecrypto. Hopefully, yes, spelled that right. Okay. You can always ask me personal questions there. And disclaimer, everything I've said today or anything posted on sanecrypto.com or our Facebook page or anywhere else is for educational purposes only and should not be construed as investment advice, period. Okay? So let me see. I'm going to get out of this in order to be able to see if we have any questions. Oh, whoa, we got all kinds of questions. Hey, you guys. Sorry, I couldn't see the Facebook Live with my full screen. Okay. Ben Holcomb. Hey, dude. Anyway, okay, let me see here. I'm going to run through these. So Harrison says, I heard a few years ago the US government was talking about getting rid of pennies. What if they all of a sudden got rid of Bitcoins? Yeah, okay. So first of all, this is not US government tender. So they do not have the ability or the authority to just say, well, these are my coins, so I'm going to get rid of them. Now, what is possible? My grandmother used to always say, nothing is impossible, just highly improbable. You know, in the realm of possibility is that they could outlaw cryptocurrencies. Okay, some countries have done it. I think South Korea and I forget which other ones. The United States is not. I mean, I always say if you're thinking that should be a red. Say if you ever hear yourself say the words "I think," that's a red flag. And I just basically said to myself, I don't think that's going to happen. That's thinking, which is so. To be fair, that's part of the risk. That's part of why we only invest risk capital. Okay. However, what I really think is that's kind of like saying, you know, the United States would shut down, you know, the internet when it was in the beginning phases. I mean, there are just too many companies building too much stuff. As a technology, they're just going to have to, you know, get over it. Tyler says, I don't really use paper cash now as it is. Why would I want to buy coins? Yeah, you're not buying this to use as a payment method right now. Although, yes, in theory, that is what, you know, that's what Bitcoins are, at least. These other ones are serve other purposes. But as you might have missed when I said earlier, right now people are not using this as a way of exchanging money. They're using it either as an investment. And the reason you would want it as an investment is because, I don't know, it went up 1,900% this year. And as a store of value. Okay. So right now this is purely an investment play. Okay. Later down the road, it might be something different. Harrison, maybe you're joking, right? I wear skinny jeans most of the time while they fit in my pocket, or do I need to wear my khakis to go get them? All right, fun. Okay, I've already answered this. I just did. Okay, so let me just go back over it again. Okay, because these questions: how much does one coin weigh? If I buy Bitcoin, where do I go to pick up the physical coin? Again, I just covered this, but in case you missed it, it is not a physical coin. So it is software. It is basically a ledger, entry that says you own it, and it is protected by a software key, which you can use to send to other people, cash it out, etc. So there is no physical coin. Okay. Okay. Not sure at all what Christian is saying, but that's okay. Couch for sale. Don't know anything about that. We have no couch for sale. Interesting. Zachary says, do you determine the fair value of Bitcoin through DCF, FCFE, DDM? So first of all, again, yeah, okay. So I see a bunch of other stuff. I have no idea what auction of a couch you're talking about. Okay. Okay, let me answer all of those. So essentially, the value of Bitcoin is different on different exchanges, right? That is a feature, that used to be true of the options market and the Forex markets. Gradually over time, as they became more and more mainstream, they became more and more connected, and that price differential, that arbitrage opportunity went away. I don't, because I'm not trading this stuff. It's a long-term buy or hold. I am looking at the exchange on which I am, am buying and selling, and the fact that it might be $100 different than a different exchange is neither here nor there. I'm not chasing pennies. We don't trip over a dollar trying to save a dime there. Okay. Zachary says money is a store of value because it is accepted as transactions for goods and services. Bitcoin is not. I actually disagree. Bitcoin has huge use cases, particularly in the high net worth market, as a store of value. It is rapidly starting to replace these offshore bank accounts and other things because it actually stores value better than they do. And some people would argue better than gold. You can't, people don't accept gold for goods or services either, but it is the primary store of value, right? Zachary says, when I get locked out of my exchange and the price drops 15%, I can't do anything about it. Why should I ever buy Bitcoin? Yep, that is part of the risk. Absolutely. Look, you're in a bubble. So back to this slide right here. Okay, this is why we only use risk capital. And the reason we're doing it is because of these outsized risk return ratio, knowing that it might become zero. You might lose everything, but the potential to earn such outsized returns just makes it so that to my way of thinking, for me personally, I own it. You just can't ignore that. You just can't. And the way that you deal with that, which may or may not work, because look, I was there for the internet bubble, and when it burst, it was ugly. I always tell people, you think people trying to find the exits in a fire is ugly? You should see this, but particularly when the internet had a lot more liquidity than this does. So when they all run for the exits, and they will, which is the whole point of saying crypto, it will be ugly, and most people won't be able to get out. Just so you know, which is why you have to have risk capital that you're willing to go to zero. But if you have a system of periodically knowing when and how to take profits off of it, as well as some sort of an early warning system to be able to get out or not, right? There is the opportunity still, I think, to make a fair amount of money or none. Just depends. Okay. Okay, yeah, and I've already covered that. So how is the cryptocurrency a viable form of transaction if the price is too volatile? It is not. Right now, it is not. And may never be, and that's okay. Because again, for the same reason that gold is not a good form of transaction because it's not easy to carry around, they are about as widely accepted. So it's the same idea, okay? All right, let me see if I hit refresh, if I will get any other questions okay, I was not seeing all these questions. That makes sense. Okay, good. All right, good. I hope you guys found that helpful. It took a little bit longer than I expected it to. Just one more comment for you guys, before we go. I want you to remember and repeat after me, okay? There is no such thing as magic internet money. Sorry. Okay. Anyone who says that there is, they are an amateur or trying to take advantage of you, or both. Okay. Okay. Look both ways across the street and have a good day. Love you. Bye.